Hey, good morning, options traders. Welcome back, everyone. I get asked a lot about the various features in thinkorswim, and one that comes up a lot, lots of questions, is with the Backtrades. And how do you use it? How do you read it? Well, it's a good question because it's really an invaluable tool inside of the thinkorswim platform, but so few traders know how to use it. So let's go have a look at Backtrades. So what's the point of Backtrades? Well, we know that traders like to experiment with strategies. That's really the main reason for using paper money. But there's a problem. The problem is you'll have to wait to see the results. So for instance, let's say that you want to see how a 30-day butterfly spread will behave. Well, you've got to put it on today, and now you've got to wait for 30 days. Every single day checking to see how it performed. And probably what your real concern is, how would it behave at expiration? But you got to wait. And then you get to expiration and you say, well, gee, I wonder if I had tried different strikes. Well, now you got to put those on and wait another 30 days. It's a very long, slow, drawn out process, and that's why so many people just kind of get frustrated with paper money and quit learning. Is there a way that you could fast forward through those dates? And the answer is yes, and that's where the Backtrades comes in. So let's jump over to the thinkorswim platform and take a look at how to use it. All right, so now here we are over into thinkorswim. I just happen to have Microsoft, ticker MSFT, right here on the platform. Just going to leave that there. It doesn't really matter what we look at. But the thing that you want to use is right here on the Analyze tab. So click there, and you'll see some various sub-tabs below. And the one that you want is right here called Think Back. And that's what we're looking at here. And what Think Back does is it stores all of the closing prices for the stock and the options, and also therefore any of the strategies that you might select. Now, if the markets are open and you're on today's date, then these will be live trades. But anytime you go back in time, you're only looking at closing trades. So yeah, it's a limitation of the system, but hey, it's better than nothing, right? So how do we move back and forth in time? Well, you're going to do that from this window up here. So today's date is 10/26/2020, and let's say that you wanted to experiment with roughly 30-day vertical spreads maybe. So one way to do it is to put the spread on now and wait for 30 days, or we can use Backtrades. We can use this Think Back. So what I'm going to do is to jump over here, and I'm going to choose vertical spreads. And then I want to go back, let's say 30 days. So come back up here to this window, and I can either toggle up and down on this plus and minus to change the dates, or I can click on the calendar. So let's go back to roughly September 25th. Okay, so the 26th was a Saturday. Let's come back to the 25th. And what we're doing now is we are looking at the closing price of Microsoft on September 25th, as well as the closing price for all of these options. So it's like we just jumped into a time machine and went back to September 25th. So let's look through our list here and find something with 30 days. I could either do this one with 28 days or this one with 35. Let's come down here, we'll do the one with 35 days. And what we're looking at are the closing prices for the spreads. Now, one of the things that's a little awkward in thinkorswim is that if we want to make these 5 points wide, we need to choose that from up here. So right now they're quoted 2.5 points wide. So let's go to vertical, deep and wide, 1 month by 2 strikes, vertical. And now I've got some 5-point spreads. It's not a requirement, but if for no other reason for the example, it'll make it easier to follow. So now what we're looking at are the quotes for the vertical spreads for this expiration back on September 25th. So on this date, there were 35 days to expiration. So the stock was 207.82. Let's say we wanted to buy the 205.210 vertical spread. Click on the asking price. Choose the number of contracts you want to experiment with. Here's today's date. And so we know the price is $295, and over here on the far right, there's no profit and no loss at this moment. Now down below we have a chart of just the stock. But watch this. If we come over here and click Backtrades, and that's usually going to populate automatically when you put your trade down here, but you want to make sure that that's checked. And when you do that, you're going to see another line down here, and that is this one, this yellow line. And this is the price path of our vertical spread from today, or at least today's hypothetical date of 9/25, through the actual date. This is what it would have done. This is how it would have performed. So it's kind of interesting just to look at this and how volatile it can be, even though it's a vertical spread. Look at some of these price changes in such a short time. But let's go and see how it would have fared. What I'm going to do is to go to my calendar, and I'm going to just click this plus sign. So I'm going to advance one day. Of course, that's Saturday. There's Sunday. Let's go one more day forward. So here was the following Monday. Look over here. It's telling us the profit and loss, $262.50. So if we bought that on Friday, on Monday morning, we were up $262.50. I'm going to come back over here, click the plus sign. Then we go back to break even, 525, 350, down 37.50, up 300, down 150, up 250. Now you can see that we're getting onto this nice big run. We went through this volatile period right here. So watch what happens as I continue to toggle through. Watch these profits over here. Look, 725, 812, and down to 625, 762, and then so on. So it's just clicking you through day by day along this yellow line. So if I want to see how it would fare as of today's date, come over here to the calendar, go to today, and that of course is going to take us to October 26th, and it's telling us we would be up 137.50 today. So again, look at how volatile it is. We went through this nice big rally up here and then lost just about half of it if you look between the low and the high. Came right back down here. So even just watching this yellow line is an invaluable tool to again show you just how volatile prices can be even when you're using a doubly hedged position such as a vertical spread. So if you've ever wanted to go and experiment with trades, not wait for 20, 30 days or whatever to see the outcome, try the Think Back feature. And so I hope this gives you enough information to get started. It's a great way to learn strategies. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and Strategy Lab, as well as a Thinkorswim training course. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.